What should contractors pay in tax? And what is too good to be true? That's what I want to investigate in this video. If you're new to the channel, please consider subscribing. You'll be very welcome. And if you press the like button, it's really helpful to me. So what should contractors pay in tax? I think if we know that, then we can consider whether what we're being told is actually too good to be true and whether we're putting ourselves at risk of inland revenue investigation. Now, before I look into that, I just want to remind you about IR35. So if you remember, IR35 is a bit of tax law that says if you behave like an employee, you should be taxed like an employee. And coming in over the next little while, certainly from April next year, then the person who decides whether they consider you are IR35 compliant or not compliant is the large employer that you work for. So that's for public sector bodies and from next April for large employers. So because I'm an accountant, the inner accountant wants to prepare a spreadsheet. So a spreadsheet I have prepared. So here is my spreadsheet on all the different tax rates that you'll get under the different sorts of contracting that you can do. So if you look at the spreadsheet, it shows the main ways in which you can act as a contractor. You can be a sole trader. Now, admittedly, that is quite rare because most companies will insist on you doing it in a different way. So although it is possible, it is actually unlikely. You can work through an umbrella company. You can just be an employee on a temporary contract. Very similar to that, you can be within IR35 and they'll pay into your company as if you were an employee. So the tax rates are the same if you're within IR35. Or you can have your own limited company and work out with IR35. So those are the sort of the four main things. And what I've done is I put in green is whether you can, is relating to expenses and other similar things. The yellow thing is the cumulative tax rate, adding all the taxes together. Yellow is for basic rate taxpayer and amber is for a higher rate taxpayer. Now there are, each format has a different sort of tax that you pay. So you might pay income tax, you might pay corporation tax, you might pay dividend tax, employers' national insurance and employees' national insurance. And a different combination for each sort of entity that you are. But what you can see is that if you are a sole trader, you pay 29 and 42% tax. It's less because you don't pay employers' national insurance. As an umbrella company, you pay 45.8% of basic rate taxpayer. That's huge, isn't it? And 55.8% as a higher rate taxpayer, and that's before any student loan repayments of 9% as well. Such a lot. As an employee, it's the same, 45.8% and 55.8%. And then in a limited company, now the numbers don't quite add up across the column because I've had to multiply one figure by the other to get to a third figure. But trust me, these are the cumulative rates. You get, it's 25.1% and 45.3%. So you can see that a sole trader is actually quite low. Limited company is much the next best, and being under an umbrella company or employee or within R35 is less good. Also in terms of expenses, then with a sole trader and a limited company, you can claim more because you can wholly and exclusively, but under an umbrella company and employee, you have to be wholly, exclusively and necessarily, and that really affects how much you can claim because as an employee, you can claim very, very few expenses, but in a limited company or sole trader, you can claim more expenses. And the other side of being a sole trader or limited company is that your spouse may be able to do some work. You've got to be careful because they have to only be paid for real work that they do. But if you've got your own business, then your spouse can receive dividends and can do some work for you. And those things just aren't available if you're being paid through an umbrella company or you are an employee. So those are the tax rates, and you can see that under umbrella company or as an employee, you do pay very high rates because effectively you pay within your day rate the employer's national insurance as well as the employee's national insurance, which I know seems unfair, but it is the case. So if you're being offered something where you're paying significantly less, so I've seen it where a contract says, oh, go through an umbrella company and your gross pay will be 80% or 90%, your net pay will be 80 or 90% of your gross pay, and you'll receive some of the money in loans. Well, just be really careful, because a lot of these things rest on a barrister's opinion, or are just aggressive tax planning, scammy aggressive tax planning. And the person who is at risk is you, the contractor. Because you don't know, by the time the revenue investigates, which will be 2 or 3 years down the road, you don't know whether that person is still going to be there. They might have taken their money and skedaddled, and you'll be left to make the payments to the revenue. So if you are being offered rates that are significantly, or where you're left with significantly more money than perhaps you should be, just be really careful with what you do. It may be correct. I mean, I'm not saying that all tax planning is bad. I'm just saying that the lower the tax you pay, then the more you're walking down a road of aggressive tax planning, which has risks. And I know that because there are loads and loads of contractors, millions maybe, of contractors, and that contractors are reasonably highly paid, the tax take to the government is huge. So the revenue is all over this. And what you might be considered to be a bit sneaky tax planning, they consider to be aggressive and antisocial tax planning. So just be really careful. They might even consider it to be criminal tax evasion. So be really, really careful with that one. And the other thing I just want to touch on is how everybody gets paid. So if you're an employee, your payroll gets done by the employer, and the money comes to you. There are actually no commissions. Nobody's making a living off how you're paid. In an umbrella company or a limited company, an umbrella company need to pay the people who run the umbrella company and the inherent risk that they're taking. And normally the cost of that and having your own limited company are normally very similar. So in a limited company, again, normally most people have an accountant to run that for them, and that does cost money. It's normally cost similar to an umbrella company, but obviously it depends on your specific examples and who you're getting to do it. And a sole trader is actually quite a lot cheaper because there's much less to do. But actually, there is a sort of commissions as well flying around, so you just need to be aware of that. Now, I'm not saying in all cases, but the recruitment consultants have been known to receive commissions or receive money one way or another from the accountants who deal with large pure contractors accountants, and those companies can give commissions to the recruiters, and also for the same as for umbrella companies. And there are also, if you are doing some sort of tax scheme, there is normally some sort of financial arrangements that are going on. And you need to make yourself aware of that, because if a recruiter is pressing you very hard to use a particular firm's services, I think a little bit of healthy cynicism is allowed, where you just think, are they being paid by that third party? Don't forget that the recruiters are salespeople, so they will be persuasive. That's their job. Of course they are, and they're lovely, and we love them for it. But just be careful to make sure that you understand if you've been trying to persuade it to do something, just where the money flows, because that might tell a story. Please press the like button if you like the video, and if you haven't already, then please consider subscribing.